Good morning, this is Robin Bieber on ChartTalk on the 30th of June at 6:55 in the morning London time. The chart in front of us is Org RBOB, more of that in a minute. The key about yesterday's action was actually our Org RBOB moving down to its 34-day moving average and then breaching that and moving down to its correction point at 111.46. The low was 111.28. This completely completed a price cycle, and it was a very, very dangerous and put RBOB and the rest of the contracts in a very dangerous condition. When RBOB completes a price cycle and has got a 5-day gap of over $3 a barrel, you know there's danger. And that's exactly what happened yesterday. And we're now specifically talking about RBOB. Back down, here we go, to the 34-day moving average, this brown line. Breach it a bit and virtually holds a key CP to the cent. You throw in the 5-day gap at $3 a barrel, which is the difference between the price action and the 5-day moving average. You can see it clearly here, the red line 5-day moving average and where the price was. And you've got an overextended and very dangerous market. At the same time, the rest were breaching their 21-day moving averages, but those were quickly moved over. As soon as we moved over the 21-day moving averages on all contracts but Org RBOB, the scene was set for a rally to the short-term moving averages, the 5, 8 and 13s, which we'll see in a minute. The key today is what happens here at this turquoise line. 120.18 is the single most important resistance on the board at the moment. If Org RBOB can move over the 21-day moving average at 120.18, it's setting the scene for a rally to the 13 and 8-day moving averages, which are higher. The 13 is at 121.51 and the 8 is at 122.39. In other words, over the 21 and we get a bit of a rally. Only a move and close over the 8-day would suggest some serious upside, which is at 125.71. But the initial pivot, the 21-day moving average at 120.18, will give us the guidance as to what's going to happen today. Below it, and then perhaps sliding below the 5-day moving average at about 18.63, will put some further pressure on this contract down to its bull-bear pivot, yesterday's 50% correction point, at 115.54. So watch the 21-day moving average very carefully indeed. It's the single most important pivot on the board and will give us the next leg. We'll just look at the crudes because they were classic and the same. And in other words, the action was the same on both SEP Brent and TI. And here you've got the rally over the 21-day turquoise action and over the short-term moving averages. That was constructive, but you need the rest to join in. It must stay over its 8-day at 39.40. That is resistance, initial resistance today, and we're printing 39.37. If it can stay over the 8-day, there's some more momentum and it will probably take it up to 40.69. Likely is it'll breach it to the downside, but so long as it holds the 21-day moving average, the turquoise line here, at 38.63, it's in good shape and we should be in resistance testing mode. At the moment, the short-term moving averages on all contracts bar RBOB are likely to act as trapdoors to support or springboards to resistance. We need to stay over the 8-day to get to 40.69. If we break below the 21-day, we're going to go and test range support. The stochastic is still negative. Brent is exactly the same. It's testing its blue line, the 8-day moving average around 41.75. It needs to move over there to give it a fighting chance of a move to 42.45, the upper end of the resistance, range resistance. If it fails to hold the 21-day at 41.04, it'll act as a trapdoor and we'll go down to range support and the lows of yesterday again. That's the sort of parameter. Watch the 8-day moving averages on the two crudes. They're critical for their further upside. If RBOB moves over 120.18, the odds are those 8 days will be smashed through and we'll go into range resistance testing mode. Now, if we look at heating oil, here you see the rally above the 21-day into the teeth of the short-term moving average. It now needs to move over the 8-day moving average, the blue line, at 118.82 to give it some upside. It must not close below the 21-day around 116.84 or it's in trouble and we would expect it to push lower. So it really is a matter of what happens at the short-term moving averages today for virtually all the contracts. And gas oil, the right-hand chart, July gas oil, it's fine. It rallied off its 21-day moving average, the turquoise line there. For further upside, it really needs to push over the 348.50 level where the 8-day moving average comes in. Sorry, the 353 level. I repeat, 353 for the 8-day moving average to have serious upside. Whilst it's between the 8 and 21s, no clear direction. Below the 21s would suggest tests of support. So the message is very clear. We've had a great correction and a price cycle completion yesterday. The early warning signals were there for RBOB with its 5-day gap, and it's in the proximity of its 34-day moving average and CP. It's now rallied up, and for this rally to have any serious upside, you must at least have August RBOB over 120.18, the 21-day moving average, which would then take it up to the 13-day at 121.51 and the 8-day at 122.39. In other words, give it some upside, but only serious upside would be green lighted on RBOB over 122.39. Meanwhile, the crudes must get over their 8-day moving averages, and Gasol must in the same position must get over its 8-day to spur a rally. The contracts have rejected the downside for the moment. That would be negated, i.e. they would be voting for further downside if they went below their 21-day moving averages. And it's key what RBOB does is it's 21-day at 120.18. They're far short at the moment of voting for serious upside. What they're voting for at the moment is tests of the short-term moving averages and range resistance. Now, if we look at a bit of structure, Decred Dec TI, it's rejected the downside with the dip to 176 and rallied. It now needs to get over the 8-day at minus 120 to have upside, not dissimilar from the flat price. Decred Dec Brent held the 21-day, rallied into the short-term moving averages. No downside whilst it holds the 21-day at minus 256. No upside unless it can break the 8-day at 215. And if we just look at the 60-minute chart on Sep Brent, it's suggesting a little bit of morning weakness, nothing too serious. I.e. a reaction back from yesterday's strength a bit, but RBOB's 60-minute chart, Org RBOB, is suggesting some further downside in other words, a cooling off dip. So be careful, watch it very carefully, and generally watch RBOB at 120.18. It's the most important resistance on the board. That's all for today, folks. Good luck, good trading, and bon appetit.